Hello, I'm Sarah from TurboTax with some information about how the federal gift tax works. Most people are unfamiliar with the gift tax rules, but for good reason. The average taxpayer rarely encounters it. Here's why. Most of the gifts you make are usually excluded from what the IRS terms taxable gifts. These include all gifts you make to your husband or wife, most donations to political organizations, any medical or tuition bill you pay for someone else, and most importantly, all other gifts that do not exceed the annual exclusion amount. This annual exclusion is key to avoiding the gift tax. Essentially, the government determines the amount of annual tax-free gifts you can make to each person. Currently, this amount is $13,000. It works like this. Suppose you decide to give your son a check for $15,000 this year. Right away, you can exclude $13,000, which leaves you with a $2,000 taxable gift. But don't worry, because of the unified credit, you probably don't need to pay tax on the $2,000 either. Generally, you get a one-time credit of $1 million in addition to the annual exclusions. So if you use $2,000 of the credit to eliminate tax on the gift to your son, you then have $998,000 left to use on all future gifts. Except for the very wealthy and very generous, most people will never hit the $1 million mark, and so won't be subject to the gift tax. For more tax tips and guidance, visit TurboTax.com.